The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Policymakers continue deliberating on the future of crypto regulation in the United States. Fed Chair Jerome Powell is calling for a strong regulatory framework for stablecoins, and Senator Elizabeth Warren is asking the SEC to clarify its role in regulating crypto exchanges. Weighing in on how this will all take shape is Timothy Massad, Senior Fellow at the Kennedy School of Government at Harvard and former chair of the Commodities Futures Trading Commission. Welcome to the show, Timothy. So I mentioned Senator Elizabeth Warren. Great to have you. She says there is a lack of regulation to provide basic investor protections at crypto exchanges and that it is unsustainable. Do you agree with some of her concerns? And they range from, a lack of basic regulatory protections as traditional exchanges, no protection around fraud and manipulation, as well as citing a case from Bitwise, a study saying that 95% of trading volumes is fake.
She's correct. And I talked a lot about this in a paper I wrote 2 years ago. There's no basic framework for regulating what I would call the cash market for crypto, which is, the buying and selling of Bitcoin, Ethereum, and so forth for cash. There is regulation of Bitcoin futures, but not of the cash market. So exchanges like Coinbase, Kraken, and so forth aren't subject to the same basic standards that we have for securities exchanges and derivatives exchanges. And I think this is a significant problem. And I think, frankly, it's one of the reasons that prevents Bitcoin and crypto generally from going completely mainstream.
So what do you see going forward? How should regulatory authority be divided between the SEC, CFTC, as well as Congress?
Well, the problem is, some people say, well, there's a lack of regulatory clarity. Why don't the SEC and the CFTC give us more clarity? It's not a lack of regulatory clarity. It's a lack of regulation. Neither agency has the power under the law to regulate these exchanges. We need Congress to act to create that framework. And that's because crypto doesn't really fall into our traditional categories of financial assets. Some crypto tokens are securities. So when they are securities, then the SEC would have the power to regulate them. But, most are not. And so we either need Congress to act, or what I have suggested recently is that the SEC use the fact that it has a lot of applications for exchange-traded funds pending, that the SEC use that to basically impose standards indirectly. In other words, it would say, all right, we will approve this ETF if it is based on prices from exchanges that follow the following standards, the following principles. And again, the SEC doesn't have the direct authority to require those exchanges to do that, but it could essentially create an incentive for self-regulation.
So if I understand your argument correctly, there's kind of like a bit of a chicken and egg problem here, right? So the regulators are saying that we can't have an ETF because there's too much sort of fraud and manipulation in the market and there's not enough regulation. And you're saying that an ETF will lead to greater regulation. Hence, we should do sort of the ETF first to solve that problem. Is that a correct assessment of your argument?
Exactly right. I'm saying let's use it as a tool to get to basically create incentives for regulation, for self-regulation.
So, what do you think is the likelihood of an ETF happening? If you had to guess, what is the likelihood of an ETF happening anytime soon? And when do you think the earliest we might see one is?
It's all up to Chair Gensler and the other members of the commission. As you know, applications for ETFs have been pending for many years now. And the former chair, Jay Clayton, wasn't willing to approve them because he was concerned about fraud and manipulation at the exchanges, at the cash exchanges. And that's a valid concern. You cited the Bitwise study, which did find that 85% of the trading was fictitious. There have been a lot of other reports too. And so there are real problems here. There just isn't a framework to prevent fraud and abusive practices. You have conflicts of interest. Exchanges in crypto can do a lot of things that we don't allow securities exchanges or derivatives exchanges to do, such as their own proprietary trading. So they're effectively in a position to trade, to compete against the trading of their customers. There aren't reporting standards. There aren't disclosure standards on what they have to disclose to their customers. And there aren't requirements for, say, best execution the way we have in the securities market. Now, practices vary among the exchanges. Some are clearly better than others. But I think we need some basic standards that apply to all of them.
So, Chairman Massad, how do you square this with your support of a Bitcoin ETF with some of the concerns about market manipulation, particularly with stablecoins that you've expressed in the past, and that is this idea that the assets, for instance, backing a stablecoin might not actually either be there or might not be fully there, or are assets that normally wouldn't be considered safe and redeemable quickly, and therefore maybe inflate the prices underlying the prices that are underlying Bitcoin. You have also too this can all go on offshore and affect even U.S. prices. So how do you square away those two issues? And do you see the SEC maybe using? Oh, okay, yeah.
Well, those are different problems. You're right. That's a problem also, the stablecoin issue. What I'm suggesting for ETFs, again, is just to address the ETF issue as a way to bring some regulatory standards to the exchanges. The stablecoin problem, you've articulated it very well. We don't have standards that require stablecoin issuers to keep those reserves that they receive on selling the stablecoin tokens. They're not required to keep those reserves in cash, treasuries, or other what we call high quality liquid assets. And so if there were a sudden spike in demand for withdrawals, it's not clear that they could meet those. And the biggest, Tether, has disclosed a little bit about where its assets are invested, and it wasn't comforting. They have some in cash and some in commercial paper, but it's not even clear what quality of commercial paper that is. But they have a lot of assets in loans, undisclosed loans, and other things. And so we need standards there too. Now, that would require a different approach. It would either require Congress to do something, and there is legislation pending on that. I think the Financial Stability Oversight Council could look into this, and conceivably it could create some standards there, because stablecoins kind of fall in between securities and banking. You can look at them almost like bank deposits, or you could look at them like money market funds. So, I wholeheartedly agree with what Chair Powell said yesterday or the day before, that we do need some standards for stablecoins. This is a separate but very real problem.
But is it really a separate problem? I mean, wasn't this sort of kind of floating in the air when the SEC first shot down the Bitcoin ETF a couple of years ago, if not more, saying, hey, there is market manipulation. And you had Griffin and Sham's report that came out that basically said that it was stablecoin related, even though there is no actual evidence of it. Nonetheless, that was something that perhaps the SEC might have had in mind when they said, "Hey, this is a problem." So are they really separate, or are they kind of sort of part of the same thing?
Well, you're right. You're right that there can be a connection insofar as Tether might have been used or is being used to manipulate the price of Bitcoin. Which was what the Griffin study said. Yes, they are connected in that sense. But sorry, I'm outside and there's some mosquitoes around me. But the problem with stablecoins goes beyond that, if you will. It's not just this manipulation risk, but it's also the quality of the reserves and whether there could be a run on a stablecoin, much like we saw in 2008 with runs on money market funds. And that's what raises the question of where are those reserves being put. And what's happened, I addressed this in a paper, when Facebook came out with its Libra proposal. I talked about the need for standards for Libra. At that point, Tether wasn't all that big, but Tether, as you know, is now a 60 billion market cap. USDC is about 30 or so. So these are fairly significant financial instruments. And that's why I think we do need some standards on what they're doing with reserves to ensure that they have liquidity. Yeah, go ahead. Sorry.
Could that be the regulatory backdoor for the SEC to get in then? If they say, look, we might not be able to necessarily regulate Bitcoin spot markets, but we could regulate the stablecoin market, which is which is pretty much a backbone of the crypto markets, and then use that to regulate and to eventually approve a Bitcoin ETF.
Possibly. They'd have to decide that a stablecoin was a money market fund. And I think there is a good argument for that. I've suggested it. A lot of people say, no, we should really regulate stablecoins like their bank deposits. But, even if you take that step, I don't think it's quite as easy to get to the creation of standards for the exchanges as it might be with the ETF route. But, look, I'd love to see the SEC go down both paths and address both the ETF question and stablecoins, just as I'd like to see Congress address both of those. The ideal thing, of course, would be for Congress to address this, but the likelihood of that happening in a way that creates a good framework is low odds.
Well, along those lines, Avanti Bank CEO Caitlin Long was on the show earlier this week saying that there's a steady drumbeat in DC to control the payments and US dollar gateways as a way to control crypto. Right. Do you subscribe to this approach?
Yeah, I think Caitlin's approach there is a very interesting one. And she's right that stable coins are essentially connected to the payment system, the dollar payment system. I mean, stablecoins are really creating dollar liabilities, if you will. And so, traditionally, we want that brought within the banking system, which is what Caitlin has been suggesting. So, I think her position is a good one, and it's another approach to dealing with stablecoins.
Right.
So, morally, do you think we should? I was just going to ask, do you think morally, if it is a dollar gateway, do you think morally we should allow too much restriction on stablecoins if they're used, for instance, to get money out of countries that have capital restrictions otherwise? If they serve as a method for people to evade them, so to speak, but in cases where there are repressive regimes?
Well, that's another problem too, and I think that could be part of an overall regulatory framework, is to make sure we have good know your customer, good anti-money laundering rules. But my approach generally is I want to see crypto advance. I want to see a regulatory framework that allows it to be developed. I don't subscribe to the views that, because it's being used potentially for illicit purposes, we should outlaw it. I don't think it's possible to outlaw it, and I don't think that's a wise approach. And traditionally, our approach in financial regulation has been, let's create standards that ensure integrity, transparency, prevent fraud, ensure investor protection, but let's let people invest in what they want to invest in, and let's let people develop new financial instruments. And that's the philosophy that we should be applying to crypto as well.
At the same time, we're seeing others in the crypto space take other avenues of action. Shapeshift CEO Eric Voorhees is dissolving his company into a decentralized entity, which many in the DeFi space believe is beyond the scope of regulators. Do you think this will work? Can regulators regulate a crypto firm that exists everywhere and yet nowhere?
I think there are points of regulation with DeFi. It's a little bit more challenging, but you can look at the governance arrangements, who has the keys to make changes. You can look at the development. You can look at what entities are involved in those. And again, I'd like to see DeFi advance. I think DeFi is very important development and trend. And something I said in my paper 2 years ago was, we needed regulatory standards, but we should make sure that they don't penalize decentralized applications and methods. And traditionally or often, regulation does favor large, centralized intermediaries that are well capitalized. I'd like to see standards that are fair and allow for decentralized systems to develop. And again, that's something that they could do if they wanted to go down that road on ETFs. They could think about standards that DeFi apps could meet. And I think that would be a good way, to have a level playing field, if you will.
Yep.
One quick final question. We've had some people on our show saying that, criticizing Bitcoin for saying that there's basically no underlying value. I'm just curious how you respond to that very common criticism of Bitcoin.
How I respond to that is, if people want to invest in it, we should let them invest as long as we have a regulatory framework around it. I don't know whether there's long-term value in Bitcoin, but I can tell you this. Bitcoin, to my mind, you can draw a pretty direct line from the launch of Bitcoin to the announcement by Facebook of Libra, and now to just about every central bank in the world talking about central bank digital currencies. So even if you say Bitcoin doesn't really have long-term value here, it has led to some very important advances. And so, again, that's why my attitude is, let the financial sector innovate, but create a regulatory framework around that to prevent fraud, to ensure investor protection, and to ensure, consumer protection and reporting and so forth.